Dow Jones Composite. We've spent the better part of the weekend and how the Dow had made all-time highs up here, and we caught a reversal, and then we put in the tops over here on a monthly level. One thing that MMTs have learned is how that Dow bull run with with the weekly moving average, with the weekly moving average is turning and closing 4 weeks above it over here. We got down to these all-time lows here, again back down to these 2010 handles where breakouts had occurred before. And basically when we rallied back in 2010, we had QE2 and we were net long when we got these weekly buy signals. And then we got another weekly buy signal and we closed 4 weeks above the 10-week, and we traveled all the way up here. But now the Dow is in a bear reversal, no longer a bull run. And the reason why I'm saying that, these are the 2011 lows, sure, but the 2000 calendar 12 movement that started up here is slightly more of a bear than a bull, but not by much. Basically, when we put in these tops up here in the Dow, we were getting short at the first reversal, and we got support here, as they should, right here. Then the counter trend came back to the reversal, and for 1 week, 2 weeks, 3 weeks, 4 weeks, with the 10-week turning down, that is called bear reversal trend versus bull when they're going up in value and they're staying above their 10-week. When they get up here at the top of the resistance on the Dow, as we clearly said, that the Dow is selling off on a weekly level. Yes, it has not broke its bull weekly buy signal, and this is all standard technical analysis. But listen, we use our own platform, which is much more sophisticated. We're just showing it on a standard platform. And what I will caution people is, if there isn't any more stimuluses, if Ben Bernanke doesn't do QE3, if there continues to be a run on any banks in Europe, such as big broker dealers and things like that, and you got Spain, you got everything that they had a great resolution to, and this was where that bull expanded right here, and this is where that 2011 bear was leaving the market on the Dow, and it was time to get long. And then they came in and they walked it right up to the highs, all-time highs. And now it's slightly right back in the calendar. This is a yearly trend. Now, on a monthly, which I will show you on a monthly level, the Dow had come all the way back over here to 2008 highs, right here. Yes, it did. That's this area right here. Now, I will readjust the chart, and I will show you clearly who's in control. And the part that I'm going to show is where this top was relative to this 2008 downtrend that we said that the Dow was going to have a lot of trouble right in here. And right here is where that trend line goes, and we covered that very well. And this was that 2007 and that 2008 really nasty year for the bulls. But then we came all the way back up in the Dow and tested that, and that was the big short that we talked about. Not only did we talk about it, we did it. And not only that, on a monthly level, the bear is slightly a little bit more positive than the bull within the calendar year 2012 structure only. Now, who's in control of it longer? The bull still remains in the longer term, where all the stimuluses work. Back here was QE2. And what did QE2 do? It leveraged up everything. Now we're talking about if QE3 doesn't come back in, and this was May when we had the flash crash. We were there, but we put in a monthly bottom. And we had a great rally up to the highs of 2011 of that reversal. And we called that. We went straight down. That's that 2011 bottom to the 2012 rally on a monthly level. And the bear got put out of the market right here when it got down to that major area right here. And that major area was this breakout back in 2010. It got tested. And we made higher highs. And each one of these bear lows this is higher than that, and this lower end, this low, is higher than the previous one, and the current pullback to the 10 and the 20-month moving average is that it would not be, it depends on what goes on in Europe, but I can tell you that the markets can go lower for one reason. When we look at the Dow here, we look that if there isn't any new stimuluses and any resolution, we can sell back down here and test these lows on a monthly level over here in 2011, where the bear was leaving the market. And it did leave the market. But right across here at 11,500, that's going to be the key should we break down. Tomorrow morning, markets are going to open up, and if there's not any resolution to the financial crises that's going on, and there's a lot going on there, this whole calendar yearly move could go right back in a full-time bear. It will depend on policymakers and everyone else alike. It will depend on QE3. It will depend on, why people would want to own equities. But why does it get uglier is that the yearly growth in the GDP and the jobs report, none of it's good. None of it is. None of it was going to change right away either. We take the bull rally. It started here. We took it all the way to the top. And the good thing about it is that we'll see here at 12,000 level right here if we break down or not. If we do break down, we could sell down all the way to 11,500. That will be dependent on the resolutions that would happen for the Dow 30 stocks. And once again, it's our pleasure to do our year update on the Dow for the MMT school. And if you're innocent watching it, pay attention that we always was telling people, listen, you take that bull for what it's willing to give, and then you got to know when to cash it in. And hey, look, the 2012 bull rally on the Dow was a counter trend to 2011 bear trend. So it's at crucial stages right now, everyone. And you're below monthly moving averages right now. Short term, the volatility is certainly there. The volatility, we told people on the very first trading day of April that price volatility was going to increase and that the bear volatility in the exchange model tape was going to come into play and wash out that bull side. That is the value of understanding bull and bear and yearly trends and the mid-year, year-to-date, half-year update on where they're at. 3-month breakout, 3-month reversal, and austerity is around the world. But at some point, we'll be a buyer off of the bottom and great bear moves off the bottom when all of the havoc will clear its way. If there are resolutions, then we bounce quicker. If there are no resolutions, then we sell down accordingly.